The electric cars industry is evolving quite interestingly. It's the present and the future. And if you invest in stocks, this industry will be one to look out for. The market leader Tesla has been able to reach over $2,000 in its stock price. So with this video, we will find out the true potential of the electric vehicle industry as a whole. You will also understand why many other companies rising are with a focus on these cars. And a good example is NIO. NIO is a Chinese electric vehicle maker that is making moves in 2020. NIO's sales reports back in June were better than expected, as their vehicle sales were up 215% year over year in the same month. NIO, which listed in the US nearly 2 years ago, is arguably China's closest competitor to Tesla. Founded in 2014, the company currently offers two premium electric SUVs, ES8 and ES6, which are priced starting at about $51,000, and one EC6 car. The company is also innovating in self-driving technology space and offers a battery swap service. NIO delivered 20,565 cars last year, making an 81% year-over-year increase. However, the company's financials was tough, with net losses exceeding its revenue of about $1.1 billion revenue and $1.6 billion net loss in 2019, as gross margins remaining negative. Shares of the Chinese startup plunged more than 80% from their highs as financial troubles mounted. And since its public offering on the New York Stock Exchange, several executives, including one of the founders and leaders for NIO in the UK and the US, have left, in addition to many layoffs. Then, in the middle of the coronavirus outbreak, NIO announced funding talks with the government of Hefei City in southeastern China that later resulted in a lifeline of 7 billion yuan, $1 billion, from investors, including state-backed entities. Meanwhile, vehicle deliveries hit a record 3,740 in June and topped 10,000 for the second quarter overall, according to NIO. And just like that, the company was saved. Since then, NIO has been working hard to make sure they stay relevant in the EV industry. They plan to release a semi-autonomous technology that allows hands-free driving on the urban highways to users in October 2020. As Chinese electric vehicle makers ramp up efforts to combat Tesla's Autopilot driver assist system. Called Navigate on Pilot, NOP, the technology will enable a NIO vehicle to drive from a highway's on-ramp to off-ramp, merge lanes, and cruise on a highway following a route on the GPS navigation system. The technology is said to be released via software update. The company said that NOP would be the first assisted driving function using high-definition maps on mass-produced vehicles in China, a practice that few automakers have adopted due to the Chinese government restrictions on foreign companies recording geographic information. Speaking to Chinese media, CEO William Li said its test vehicles have driven more than 300,000 kilometers, around 186,400 miles, across 30 major cities, collecting map data. He added NOP is more fine-tuned to Chinese traffic conditions, compared with Tesla's popular Navigate on Autopilot functionality. NIO recently hired Ren Xiaoqing, co-founder of Chinese self-driving startup Momenta, to enhance its R&D strength in vehicle autonomy. Momenta is currently one of the only 20 or so companies granted a mapping license by central authorities. NIO Capital, a private equity firm formed by the Chinese EV maker, led its $46 million Series B in 2017. Meanwhile, the Tesla rival is reportedly considering building self-driving technology in-house, following the settlement of a $1 billion bailout, leaving the future of its partnership with Intel's Mobileye uncertain. Chinese media reported that NIO recently reached an agreement with Qualcomm to test vehicles on its Snapdragon Ride computing platform, scheduled for mass production by 2023. Automakers view high-precision mapping to be an essential component for smoothly functioning self-driving cars, helping sensor perception and path planning with more accurate localization. Tesla is an exception, however. CEO Elon Musk said that its vision-based system, which uses cameras and artificial intelligence, is easier to scale. Automakers have mostly resorted to mapping services to gain an advantage in the Chinese self-driving race, like General Motors, which in July launched its hands-free assisted driving system Super Cruise in China, by collaborating with Alibaba's map service Amap, also known as AutoNavi. Chinese media reported that the two companies had jointly mapped more than 300,000 kilometers of road and will refresh map data via software updates every 3 months, according to a GM spokesperson. They are also competing with Tesla on the battery front, as they offer a battery swap service. seeing as the Chinese government is now allowing companies to sell electric vehicles without a battery, paving the way for NIO to launch a battery-as-a-service product. The subscription plan reduces the upfront vehicle cost and can be compared to a regular gasoline charge, according to William Li. Customers who buy the battery plan, which costs a minimum of 980 yuan, $140 a month, can get a discount of 70,000 yuan, $10,000 from a NIO car purchase. The company announced its latest model, the EC6, which is slated for delivery with a pre-subsidy starting price of 368,000 yuan, $52,571. To support the new battery product, NIO formed a new battery asset company in Wuhan, China, whose three other investors are the leading battery developer, contemporary Enterprise Technology, Hubei Science Technology Investment, and financial services company Guotai Junan International. Each company is investing 200 million yuan and will have a 25% equity interest. NIO's Li said the battery service plan could give drivers of gasoline cars more motivation to switch to electric vehicles. And even without the new battery product, Li also said demand for NIO vehicles was already going up. The company, which posted a net loss of more than 1.17 billion yuan, $166.5 million, in the second quarter, forecast in its latest earnings release that it will deliver 11,000 to 11,500 vehicles in the third quarter. NIO also hopes its new battery product can elevate its position in the industry. Well, we just have to wait and see. Though some investors see the loan from the government has a problem waiting to happen, as the government might be included more in the dealings of the company, which might not be favorable to NIO and some of the investors. Tesla, on the other hand, is relatively more mature, more known, and more expected to turn a profit for 2020. Tesla was founded in 2003 by a group of engineers who wanted to prove that people didn't need to compromise to drive electric, that electric vehicles can be better, quicker, and more fun to drive than gasoline cars. Today, Tesla builds not only all-electric vehicles, but also infinitely scalable clean energy generation and storage products. Tesla believes the faster the world stops relying on fossil fuels and moves towards a zero-emission future, the better. Launched in 2008, the Roadster unveiled Tesla's cutting-edge battery technology and electric powertrain. From there, Tesla designed the world's first-ever premium all-electric sedan from the ground up, Model S, which came to be the best car in its class in every category, combining safety, performance, and efficiency. Model S has reset the world's expectations for the car of the 21st century, with the longest range of any electric vehicle, over-the-air software updates that make it better over time, and a record 0 to 60 mph acceleration time of 2.28 seconds, as measured by Motor Trend. Tesla total deliveries also grew by 60% this year alone. The company's lineup is also more diversified compared to NIO, with its lowest priced Model 3 starting at $38,000. Tesla's business model is also looking incredibly viable, with gross margins standing at over 30%, and the company's risk of failure is now low. Tesla also has a competitive advantage in the self-driving software space, given its large base of vehicles on the road, and also has among the lowest battery costs in the industry. Its much-anticipated Battery Day event saw to some innovation that could change the game for Tesla in the EV industry, such as the plausible $25,000 electric vehicle and a battery that could last for 1 million miles before giving out. Even among the foreign companies in China, Tesla has the distinction of having a standalone manufacturing plant in China. Its Shanghai Gigafactory began rolling out Model 3 in December last year. The company plans to make its newly launched Model Y vehicles at the factory beginning in 2021. Tesla got off to a strong start in 2020, delivering 3,563 cars in January and 3,900 cars in February, and following up with a strong 10,160 units in March, which resulted to a soaring stock price. Tesla is way ahead in producing an autonomous car. Musk, who claims to have all the hardware needed and only the software is left to perfect to be able to roll out full self-driving cars without the intervention of drivers. If achieved, this could also lead to another dream of Elon Musk, which is robo-taxis. A fleet of self-driving Tesla cars acting as taxis. Best part of robo-taxis for Tesla owners is that they make money for you as a taxi while you are working, busy, or even asleep. Tesla doesn't just make cars. Earlier this year, they also unveiled a new product called Autopilot, which allows customers involved in Tesla's home storage projects, like its Australian battery farm, to sell energy back to the grid when they don't need it. Think of it as a virtual power plant network, which is astounding and revolutionary. Overall, while NIO's faster recent growth and slightly lower valuation multiple make a case for its stock in future, but compared to Tesla, it still has a long way to go. It will probably take a decade for NIO to achieve what Tesla has achieved, and even by then, Tesla would have probably rolled out more new innovations, as they always do. So if you're thinking of investing in NIO, know that it is a risky investment compared to Tesla, given its high cash burn rate and competition in its bread-and-butter Chinese market. While Tesla stock looks expensive, the company's well-established and desirable brand, with its industry-leading tech and software differentiation and fast-improving profitability, should provide investors better downside protection. That is all we have for you today. Thank you for watching. Till next time.